Ramsey's financial father reveals 7 money traps modern people should avoid if they do not want to get into debt. The use of life in today's society is full of risks, because all around can be a good opportunity and can be a trap that lures people into trouble. Meanwhile, financial father Dave Ramsey has revealed 7 money traps that people today should avoid if they do not want to face financial problems or go into debt. The 7 money traps include: 1. Bind days. The small thing, because if you want to borrow money, it means you are already in financial trouble. But Dave wants to make it clear that everyone should not live in debt every day. Bonding for days not only increases your bad spending habits, but it also puts you in deep debt because interest increases every day, debt grows all the time. To avoid this problem, you should look at your daily expenses, do not continue to spend more than income. Count the money you earn first and then limit yourself to spending only the money you already have, and if not, do not spend any more. 2. Use whole life insurance. Another thing that Dave reminds is to use whole life insurance, as it can be difficult to use when you need it. Instead, he encourages you to use separate insurance policies, such as life insurance, car insurance, and home insurance. Using different packages like this makes it easier for you to use different types of problems that you may encounter. 3. Loans with variable interest rates. The most sought-after type of mortgage available today is the mortgage, and Dave has made it clear that interest-bearing mortgages should not be created. Interest rate fluctuations can help you when the bank lowers interest rates, but it can also drag you down when the bank raises interest rates. This means that when deciding to buy a home, you should first study the loan and interest rates. You should decide which loan you think is right, good interest, you can accept and insure. Choose a fixed interest loan no matter what the circumstances. 4. Car rental. Another trap that Dave advised to avoid was renting a car. You may need to use or lack of money, but for whatever reason, you should not rent a car because it is the wrong cost. The cost is not very profitable. Instead, Dave encourages them to pay in installments instead, as they spend the same amount of money every month, but in the end you own the car. 5. Joint property ownership. Financial experts encourage you to work hard to build your own income, but they do not recommend that you own real estate with anyone. For example, if you buy a big house and have only 10% of the name of the owner, if in the future you need money, it is very difficult to sell the property because the owner is not alone. 6. Neglected with a credit card. Credit cards are being developed with the new technology of the financial sector. It can help you to spend money without having money in a bank account. But you need to know that this kind of spending is future spending, means you have to repay the bank with the interest rate. Credit cards are easy to use and easy to get along with. If you are a little careless or forgetful for a while, you will immediately fall into debt. 7. Loan from retirement savings account. Another thing Dave insists on avoiding is borrowing money from a retirement savings account. You need to know that retirement savings are different from emergency savings, so you should not allow yourself to fall into the trap of borrowing money from a retirement savings account to live on.